Hey guys, I hope you're doing well. Welcome back to my page and to a brand new video analysis. Now, this is an analysis on a trade that caught, I believe, a couple of weeks ago. It was on the 2nd of July, NFP day. Now, I'm sure you guys are aware NFP comes once a month. Now, how do you actually approach NFP days? How do you actually make the most of them? What you need to first realize when it comes to these fundamentals and this type of data is the fact that fundamentals are used by institutions to inject liquidity into the markets, right? It is like an excuse to inject liquidity. So what I mean by that is to the average trader, the retail trader who doesn't know about institutional trading, when he sees a massive reaction such as this one, right? He asks himself, well, what the hell happened here? And then he goes and checks Forex Factory and he says, okay, at 1:30 there was major impact news. So it's justified in his mind. But he doesn't ask the question, did the institutions use the news to achieve an ulterior motive? Was there a reason behind this move? Was this pre-planned? Was there something that they had to achieve? Because let me tell you guys one thing, the institutions do not operate the market in arbitrary fashion. They do it for a reason. Every single candle is printed with a motive, with a reason, with a purpose. So then you have to ask yourself on the day of NFP, why is there major impact news coming out? So before I get into that, let's just have a look at the trade itself. It was a 1 to 11.62. I took profit around here, 252. We'll explore why. But as you can see, if you held it over the weekend and then the following week, it could have gone up to 1 to 20 plus. Regardless, let's get into how I caught this trade. So first of all, let's take it back to the morning of the 2nd. So the morning of that Friday, and let's see what I saw. So obviously price is very bearish. Now, considering the fact that it is NFP day, I need to ask myself, right, why are they going to inject a huge amount of liquidity today into the market? For what reason? For what purpose? So when you guys have a look and do a top-down analysis, what you will understand and what you can see is that there is a huge amount of liquidity building, and it's been building since the 27th of May. The institutions have been attracting sellers since the 27th of May. Therefore, there is a significant amount of money, right? Significant amount of liquidity sitting above this trend line. So it makes sense why there would be an injection of liquidity towards the upside to take out those sellers and achieve the objective of, say, filling in this imbalance, filling in the IPA here, the liquidity voids in the higher timeframes, etc., etc. So now we have a bias, right? We have a directional bias. Now we know a directional bias is not enough to just enter a trade. We need to have matching confluences to give us that final green light. So for where the market was at the time that I saw it, I knew that it was engaging with this area here. Now this is an institutional candle. Why? Because it leads to a break of structure. If you have a look on the H4, you can see for those 4 hours, price was buying and selling, and then it led to the candle over here with the body closure above this previous high. Okay, if you guys look at it on the 2 hour, it can be a little bit more clear. You can see the candle body closes above the previous high. Look at it on the line graph, it's clear as day. So this is an institutional candle that led to a break of structure, and it is that institutional candle that needs to be mitigated. That mitigation process is going to give us the momentum to get in the trade, and with the directional bias of the long term, as we have established, we can look for a potential buy. So now what we have to do is investigate this institutional candle. Okay, so let's take it straight to the 1 minute. Let's go and look inside what happened here. So like with my previous posts, what we're going to do is we're going to look for the lowest point of mitigation. What that means is the earliest point in which there was a base that led to a break of structure. Now, the one that sticks out originally is this one, right? This base here that led to the break of structure here with this body closure closing above this previous high. Granted. However, we have to look for the earliest available base. And as you guys can see, I've already boxed it out. It is this price action here that is the earliest available base that leads to a break of structure. Now, it's hard to tell on this time frame because there is no bearish candle that is printed. Rather, what you have to do is use logic and price action to understand that price closed here, shot down, and then shot up, leading to the break of structure of the previous high and the high before it. Therefore, this is confirmed to be a base. Now, you can do a proper volume profile analysis on the seconds time frame, but if you don't have access to that, you can literally just look at the quarter numbers that were available. As far as this base is concerned, there are two. There is 69500 and there is 6949. Now 6949 would be the complete mitigation, which is why I'd like to enter here, which is why I wanted to enter here. However, I entered at 695 because of broker spread. Knowing that there could be up to a pip's worth of spread, I did not want to miss out on this trade. Therefore, my entry was on 695. Now let's address stop loss. Now you could have put stop loss beneath this area here, okay? However, there is some potential imbalance here in this pocket, okay? And so therefore what I decided to do was simply play it safe. Instead of putting it beneath the base, I simply put it beneath the entire low, giving my trade enough breathing room to survive any mitigation process before actually then going into profit. So my stop loss was actually down here, okay? Plenty of space. So in total, it was a stop loss of, let's have a look, only 6.5 pips. Okay, so then let's look at the actual position and let's see what took place. So what am I expecting? I'm expecting price to come into this little region and have a reaction, right? It is upon that reaction I'm going to be breaking even, right? Mitigating my loss, getting the stop loss to BE. And then I'm going to be anticipating breaks of structure towards the upside. So let's see what happens. I believe that the trade was entered close to the actual NFP time, right? So the NFP time was at 1:30, I believe. Yeah. So that's when the release happened, and that is when the price dropped to this particular area and then gave us the reaction that we expected. So we're approaching 1:30. There should be a drop any second now. Bang. Look at that beautiful drop into the area that we said. Get that reaction. Instantly we BE, we break even, right? Mitigate our risk. And then what happens? We've broken structure on the 1 minute, the 5 minute, the 15, the hourly, etc., etc. And then it's about taking TP. Now I decided to take TP here. Why? Because if you guys have spotted, there's another institutional candle, hourly institutional candle here that led to a break of structure taking out this previous low. Notice where the candle body closes beneath the previous low. So therefore, I know that there is going to be some sort of reaction here, a reaction that could warrant an entire reversal and therefore make the trade break even. Now, if I'm already up by say 1 to 5, I don't want to break even. Okay, I want to maximize this trade, especially considering it's a Friday and this is a 1 o'clock close. So it's about 2 p.m. right now. Okay. So then we investigate again by going into this institutional candle in order to find out where is the point we're going to take our profit and therefore maximize this trade. So I took profit at 255. Why? Because at 255, if you notice just above it, there is a situation here. There is a internal base that led to a long-term break of structure, as you guys can see, taking out previous lows. Therefore, I know a reaction will take place here. Therefore, I put my TP beneath it in order to ensure that take profit is hit. And therefore, I have my 1 to 11.65 or 62 trade. Okay, so then we simply wait it out for the rest of the day. And at 6 o'clock, it hits our TP. We're done for the day. Friday was a success. NFP was a success. And we go about our weekend. So guys, I hope you guys took a lot of information from this video. If you guys have any questions, feel free to drop it in the comments or even just DM me. Other than that, I hope you guys have an amazing week and take care. Peace.